Hello and welcome to today's webinar brought to you by A-Team Group. Today's webinar is a trading tech insight webinar talking about how to trade in the MENA region, Middle East and North Africa. We'll be looking today at the potential opportunities for people to take advantage of this growing region, some of the potential hurdles that you may face if you want to trade in the region, and we'll be, as usual, talking about the technologies used and potential technologies that can give you an edge for trading, again, in the MENA region. Before we get into the program, I'll just draw your attention to a couple of other upcoming events and webinars brought to you by A-Team. We have our Trading Tech Summit MENA in Bahrain coming up later in this month. We have our Trading Tech Summit in London in February. And if you are interested in digital assets, we have our new institutional digital assets handbook for 2024. All available, more information available through links on the page that you are looking at. So please do get involved if you're interested. Okay. We are going to be using the Slido system today. That also should be visible to you on our platform. So please do feel free to use Slido to take part in polls and to ask questions of our lovely panelists, who I will come to very shortly. My name is Andrew Delaney. I am Chief Content Officer at A-Team Group, and I'll be hosting, moderating today's event. Now, let me ask our panelists to introduce themselves and give us a little bit of background. Welcome all. Let's start with you, Rami. Thanks for joining us.
Thank you, Andrew. Thank you for having me. Good morning or good afternoon from sunny Cairo, everyone. My name is Rami Dukkani. I head the Arab Federation of Capital Markets, which is basically a business association that gathers under its umbrella all the stock exchanges and the clearing houses in region, as well as a lot of affiliate members as well. I bring in more than 22 years of experience in the field as well. I used to head the Egyptian exchange for a period of time. Thank you.
Thank you very much. Saif.
Thank you, Rami. Thank you, Andrew. Thank you, everyone, for being here. My name is Saif. I'm the co-founder and COO of an startup called Thunder. We're an investment app born out of Egypt, and we allow everyday individuals to invest in Egyptian stocks, gold, fixed income, as well as US stocks. We have around 1 million monthly active users, and we're actually undergoing an expansion right now to the UAE and the KSA. Thank you, Andrew.
Fabulous. Thank you very much. Steve.
Morning, everybody. So I'm Steve Pope. I was the founder of Solarflare, which really brought low latency trading mainstream. Now I'm a senior fellow at AMD, and we're continuing to support the trading market with our products, but as well, personally, I'm involved in our broader networking portfolio, particularly the high bandwidth networks that you're seeing in large AI ML clusters.
Excellent, thank you. And finally, Alistair.
Hi there. Yeah, my name is Alistair Richardson. I'm responsible for global strategic business development for the financial services sector at AMD. Work very closely with Steve on the Solarflare and the networking side of the business, but also looking at how we bridge that gap with the rest of the AMD portfolio, including our CPUs, GPUs, and how that really addresses the needs of the financial services market and what we can do to help expand and develop the MENA region and other regions globally.
Very good. Thank you all, gentlemen. And again, welcome to today's event. We have a great discussion lined up, but we're going to kick off with a poll for the audience on Slido. So the question that we're posing is, what do you consider to be the major obstacles to trading in the Middle East / North African markets? So please vote on this poll using your Slido. And while you're doing that, we're going to kick off with our first question. We'll come back and review the answers shortly. So let's pose the first question to Rami. Rami, what makes MENA such an appealing market for institutional investors, international investors, I should say?
Okay, thank you for that very good question. The MENA region for a long while has always been a net exporter of capital. So the major export commodity of the MENA region for a long period of time was the capital. In the recent few years, we have seen that capital has become a net import. So we started receiving capital from abroad because of the growth happening in the region during the last few years, especially in the GCC areas. And specifically, I would say Saudi Arabia and the United Arab Emirates have been receiving a lot of funds from abroad. This has created a lot of opportunities in creating different products, in creating different penetration for many other players to come into the region, increasing the complexity of the market itself. For a long while, the MENA region hadn't had the complexity or the sophistication of products, but now we have been seeing that happening, as well as the strong correlation with oil prices in the last few years. We have seen local markets in the GCC areas have been improving quite well. A lot of international investors are gaining fantastic gains when it comes to their returns. The MENA region, I would say, it's divided into two main parts. The rich boys club, which we always refer to the GCCs, and the more developing, more active countries like Egypt, Amman, in Jordan, Casablanca. These markets are quite active, yet they are very smaller when it comes to market cap, but very active when it comes to turnover ratios and activities. So it's an interesting blend to have in a single region. So definitely funds, when they come into the Middle East, they have a variety of different assets, different sector they can invest in, different maturities of products they can get into.
Very good. Thank you very much. Saif, what's your view?
Thank you, Rami. Thank you, Andrew. So if I think of it, Anna, to me, like any investor in the world would look at two things. It's either an avenue for diversification or an avenue for growth. If we take the first one, when it comes to diversification, I think there's two main points that I like to look at. On a more global front, the world is heading into more of a divided economies perspective. You have one camp, which is like the US and Europe, and you have another camp, which is mainly Russia and China. And you have very few countries that can actually have a very good economic relationship between both of these fronts. And I think the MENA region is actually one of those places, which is an extremely important point when it comes to diversification and like the global risk macro. And then on a more micro level, similar to what Rami said, we're seeing two countries coming out to become a significant economic hub globally, which is the UAE and Saudi, while having countries like Egypt, which remains to be one of the very few mass plays of the globe. And then if we transition this to the growth side of the equation, generally speaking, the region is very young. Generally speaking, there's a lot of growth in dollar wealth. So if you look at the region versus a decade ago, dollar wealth per individual actually is a multiplier of where it was. And this is not something that's been seen across the globe over the past 10 years, especially with all the economic and political tensions. But what I really like about our region is that it actually has forecastable development, while I think the West has reached a point where for a company to innovate and accordingly become investable, it really needs to like go out there and like create value that is almost non-existent in the world. But when you look at the MENA region, we're still figuring out 1 + 1 = 2. You have like one company doing a basic activity, and that already makes it a very big company. It makes it easy to spot all of these things that work globally and find copycats or similar companies in the region that you can actually go and invest in and ride the wave of growth. And then lastly, because there's like a lot of issues compared to companies solving these issues, each company actually has a very big blue ocean that it can actually compete in and create the unicorns of the future. Now, if I put all of this on one side and then look at a general progression of any developed nation in the world, I think it starts with a lot of VC activity, investing in all of these up and coming startups. And then these startups graduate to have a vibrant PE or private equity ecosystem, and then it graduates to having a very strong public listing environment. I think today where the MENA region is, we've already seen significant exits over the past 10 years. Think of Su.com to Amazon, think of Kareem to Uber, think of Talabat to Delivery Hero. We're seeing a lot of these VC-backed startups graduate and to become into the growth stage. So think of Tabi and Flowered. And we're actually seeing a lot of activity of these startups getting listed on the exchanges of the region. So look at Fawry in Egypt, Jahaz and Rasan in Saudi, which generally signals a big shift in the fundamentals and akin to the shift that actually happened in the US back in the 2000s.
Very good. So the timing where we're at the moment is sort of like on the cusp of something quite significant in terms of opportunity, as you guys said. That's what I'm hearing. Let's have a quick look at the poll results, because this gives us a little bit of a view, and I think this is you guys both describe the sort of the blended nature of the marketplace. The poll results really looking at the expense and complexity of setting up infrastructure in the region. Does this surprise anybody on the panel? Anyone? Any thoughts on this?
I think it's a very good setting for the panel. I think a lot of the questions that we're going to have to answer throughout this session actually relates to this point. So I'm happy that this is actually reflecting the general vibe that people are seeing.
Absolutely, yeah. Very good. Anything else before we move on?
Yeah, I think so often you look at trading in the West, and it's all highly dependent on a well-developed ecosystem. And I think a lot of people possibly think that the kind of the big bang, putting down all of that infrastructure in one go to make a step change is just prohibitive. So I think the strategy has to be for businesses to look about how you get there incrementally in a sensible way over time, without having to put down vast amounts of capital and infrastructure.
Very good. Well, hopefully we're going to be talking about how people might be able to do that in today's session. Right, let's move on to the next question on my list, which is about the liquidity landscape, and I think this follows on from the earlier remarks. What does the liquidity landscape look like, and what is the role of regulation in the region? You've got different countries and jurisdictions. What's the feel? Saif, can you give us a bit of a feel for that?
Yeah. So obviously, I'll look at it from my lens, which is mostly retail focused, because this is the nature of our business. So generally speaking, if we paint a picture, the retail has forever been locked out of this environment altogether in the MENA region. And a big part of it is that existing solutions have not been appealing. Like we've seen a very big wave of making certain services more relevant. So think of Uber when it comes to ordering a ride. Think of Uber Eats and like Delivery Hero and Deliveroo when it comes to ordering groceries and food. This really hasn't happened in the investment ecosystem. It has happened in other countries. Think of Robinhood in the US, but this is something that wasn't really existent. So all the solutions that were available to everyday individuals not really relevant to today's society. And then on the other aspect, investing hasn't been culturally relevant. And if you look at consumer behavior, the MENA region has always been a consumer society where they prefer to spend rather than to save and invest. And with that, two big changes are happening actually now. I think the first one is there is a big rise on investment apps similar to Thunder, each taking its own form and shape and like targeting a specific niche. So this is really helping blend in and converge this bridge that existed previously. And then the second thing is that the nature of the world, there has been a lot of economic changes in the dynamics globally, but also specifically into this region, where it made or forced users to have second guess on how they would use their store of value. Should I use it into spending my money? Should I use it to keep it as is, as an eroding currency? Or is it best used to actually put it into something that saves its value, if not actually grow it further? What makes me happy and proud is that the regulators have also seen this shift in mindset, and they're also changing a lot of the infrastructure regulatory needs that require for such a change to be unlocked. So if you look at Egypt, for instance, they've changed over 20 laws that govern the relationship between brokers and individuals and regulators and exchanges and all of that. Rami to actually had a very big role to play on that. So I hope he gets a chance to speak about this. But like to put things in perspective, one big regulatory law that changed was allowing people to open accounts digitally. You would be surprised that a lot of countries in the world are not yet in a digital format. But making this change allows it to go to all corners of the country. The second point is that they allowed individuals to be able to top up their investment accounts without having a bank account, which is very relevant in our world, where a lot of the activity happens outside of the bank and through cash. And then if we shift lens to more on the rich boys, like how Rami likes to look at it, the UAE is making a very big push on improving the distribution engine by allowing their exchanges to open up memberships to global brokers. So you no longer have to be a broker that is registered into the UAE to be able to like connect to the exchange in the UAE. So we're seeing a lot of this innovation happening. It's not the typical innovation that you're seeing globally, but it's very relevant for what we're trying to do in the MENA region. I think a few of the things that are still impacting the points that we're at, initial capital is something that's very big. So a lot of the countries that we have in the market are still asking for a lot of capital requirements for up and coming companies, which puts a little bit of a pause on the innovation and the speed of innovation. But what we're seeing is that they're actually tackling this issue and they're trying to make a lot of fixes. Now, to paint the picture of like what is happening and how is this impacting things, if we look at Egypt, for instance, new registrations in the exchange has always been fluctuating between 20,000 and 30,000 per year. It's actually been rapidly growing over the last few years, and last year it was actually 300,000 new registrations in a single year. And a big part of that actually goes to Rami because a lot of the changes that they did on the exchange allowed for that. Now, public numbers are always difficult to get, but I can at least share some numbers that we're seeing at Thunder from our users. The average age is around 30, when historically it has been around 40 to 50, given how the likelihood of the existing solutions. Female representation went up from 3% of investors to 12% of investors on the back of how easy it is and how relevant it is. And non-capital city representation, so all these cities that are outside of the capital cities, went from almost non-existent to around 40% of the users that we have in the platform.
So in terms of things seem to be opening up, can you just give us a feel for what the current state of the exchange technology? So fundamentally, this is a source of liquidity, if you like, across the region. Where are the major exchanges at? And then maybe we can bring Rami in to talk about what opportunities that state of tech presents. So Saif, can you just give us a feel?
Yeah, so one thing to consider is that the MENA region is culturally and regulatory different from everywhere else in the world. So how this impacts the integrations that happen between the ecosystem players, whether it's the exchange, the clearance house, the brokers, and so on and so forth. Now, one thing that is a major hurdle at this point of time is middle software. So think of the back office that integrates between a broker and an exchange. It's either non-existent or extremely outdated, not because something is bad is happening in the region, but because they've never needed to evolve into this high frequency capacity because we never had these very big volumes, which honestly puts it in a position where one of three things need to happen. Either laws and regulations need to change so that they're akin to what's happening in the globe, and this opens up the possibility for major back office or middle software providers to offer the same offering in the MENA region without having to tailor it, which is difficult for them because in the end of the day, they have their own markets, they have their own addressable market, and it would be very difficult to just completely overhaul the systems for a relatively smaller region at this point of time. The second thing that might happen is that existing players would evolve their capabilities and their capacities. And the third thing, which I think is the most likely, is that they will actually be replaced by new entrants that are focused on providing a service for today's neo broker. Now, if we take a zoomed out approach and we look specifically into the different exchanges, from our experiences, we've been talking and working specifically with two exchanges. So we have Egypt on one side. They made a huge advancement in their infrastructural capacity over the past few years. So when we started 3 years ago, our connection with the exchange would break down when we reached the 1,000 orders per day mark. Today, we're sending around 200,000 orders and things are working flawlessly. And this is on the back of a lot of infrastructural improvements that they did. They're actually in a position now where they're overhauling their entire trading engine, and we expect that they're going to complete this project by the first half of 2025. To paint a picture, today's capacity allows them to receive an order every 10 milliseconds, and we're hoping that by the end of this project, it will be closer to global benchmarks, which I know Alasdair has thoughts on. And if we switch focus to the ADX, which is the Abu Dhabi exchange, which is the bigger exchange in the UAE, they're also completely overhauling their system as well. We're expecting this to end by the end of this year. We don't really have a lot of details on what this entails, but we're confident of the team's ability through our work with them. But one other thing that they're working on is the Tabadul project, which is basically the exchange of exchanges. They're trying to create one exchange and one connectivity that connects with different exchanges in the region and beyond, which actually helps a lot with this integration piece.
Very good. So a lot of modernization activity ongoing. Rami, opportunities for people to get involved. This obviously helps.
I have a lot to say, Andrew, if you allow me. I need to respond on some points when it came to liquidity, and seconding Saif on what he said. Many reasons why liquidity has enhanced in the MENA region recently that I will disagree with Saif saying that the investment culture is not there. No, I would say no, especially for the wealthy families in the GCC. They will always have invested into North America and in Europe, European markets in different equities. They never invested in their home countries for different reasons. Mainly the lack of good quality of assets offered on the markets itself. The exchanges weren't quite empowered when it comes to proper disclosures and up to standards and all of that. Increasing the products offerings when it comes to simple things like short selling or market maker processes. These things are still very, I would say, very premature in our part of the world. So if we're going to talk about ETFs and REITs and all of that, that's our lacking products in our part of the world. So increasing this product offering, we have seen enhancing liquidity when it comes from local investors into their local market itself. We have seen that in Saudi, we have seen that in UAE, we have seen definitely that in Egypt. Another proper phenomenon that we have been seeing, especially in markets with inflationary economies, where local currencies have been losing lots of their value recently, especially in countries like Egypt and Jordan and Tunisia, we have seen local investors putting their money into the stock exchanges because they wanted to have a liquid source of assets that they can liquidate at any point of time. In our part of the world, they love investing into real estate, but they have realized at a certain point that real estate is not as liquid as expected. So they want to have a venue where they can liquidate their investments and still maintain the value of their investments. So this has increased local liquidity in the market. Also responding on the idea of the big volumes that say, and this happened actually while I was heading the Egyptian exchange, and one of my personal KPIs at the time was increasing the number of investors into the Egyptian market. We succeeded to double the number of investors in 12 months, and it showed us on the tech side that we have a lot of problem as an exchange. For example, the number of transactions per second, we had a cap for that, so we had to solve that technically, and we had to improve that to avail it not only for Thunder, but all the players in the market as well. But Thunder was the biggest when it comes to mass, so it was very visible to them at that point of time. In our markets, all the MENA exchanges are either, they have vendors either NASDAQ or LSEG. Few of them go with Euronext, but we're now seeing the discussion again of on-prem versus cloud services. And yet we do not have this mature infrastructure in the region, and we still, regulatory-wise and security-wise, they will still perceive stock exchanges as a public utility. So we will not 100% quite comfort of having the stock exchanges data on a cloud somewhere, residing somewhere in North America or in Finland or wherever. So it's still a discussion that is hindering the growth of many of the exchanges in the region. Saying all of that, Andrew, I see there's a lot of opportunities in the market. As I said, the growing liquidity, especially local liquidity from the countries itself, the quality of assets backed by strong IPO programs from Middle Eastern governments, especially in Saudi and the United Arab Emirates. We have seen huge pipeline of IPOs in the last few years. We have seen the IPO of Aramco itself. And I quote when to the CEO of the Saudi Stock Exchange that if you're investing in Aramco, you're investing in Saudi. You're not investing into an oil company anymore. We are seeing different management coming to the stock exchanges, different breed, younger generations, more pro-technology. They want to increase capacity. They want to have different targets, different KPIs. So capital markets is actually being refreshed in different ways, creating several opportunities for a lot of international investors coming into the Middle East. And we're seeing that with a lot of the funds we're talking to and we're in touch with, whether direct funds or even on the middle management. Always what we see the problem is, or still yet to be solved, is the post-trade part or the clearing part. It's always still the untouched part of the value chain that's definitely being looked into. I would say countries like Saudi Arabia and EDX got it figured out. Other countries are still struggling with the idea, which is creating some problems for investors, especially on this on equities as an asset class. We have been seeing a lot of activity when it comes to different assets as well as fixed income, for example, and being traded on the Egyptian exchange. We're seeing fixed income liquidity for this asset class has been increasing considerably in the last few years. So I think there are a lot of opportunities when it comes to the Middle East into this area.
Okay, let me bring Alistair into the conversation. Alistair, what we've heard is that there's been a lot of modernization going on in the region. My question to you is, what kind of technologies are exchanges using globally, and how could they be sort of brought in to this landscape and to help further growth in the MENA region? So what do you see as key elements?
Sure. So thanks. So I mean, we've got some great insights there from Rami and Seif, and I think it's historically a lot of the connectivity, a lot of the ways that you engage with the exchanges has really been over the internet or over slower bandwidth, which is perfectly fine for most of the retail investors or for sort of low transaction volumes. And I think what we're starting to see now is the introduction of things like co-location, which the Saudi stock market is starting to bring, and other exchanges are looking at ways to modernize their technology infrastructure by allowing more sophisticated and more algorithmic trading firms to be able to come in and put their technology. There's a huge range or spectrum, I would say, of technologies that you can use in this space, from the cloud that Rami said, but exchanges do have a lot of challenges in that space, not least as well things such as determinism. Determinism is highly important if you're a market maker and you're an electronic market maker, and you need to use the right technologies to do that. In a co-location environment, and what we see exchanges are doing is they also have to offer fairness, and that's something that's a huge talking point around the world, and a lot of the exchanges are bringing in technologies such as AMD Solarflare cards, which enable them to provide that determinism and fairness to their end customers, and vice versa. The brokers are looking to use that type of technology as well as a very simple way to get in and get that conversation started and move their technology forward without a huge uplift in new software development. So there's a combination of bringing in technologies from around the world on the software side, but also choosing the right hardware platforms, the right networking technologies that are standardized across the world to reduce that barrier for a customer to come and deploy. One of the hardest things, and we saw on that poll, was that people are saying the complexity and the costs of the infrastructure. And one way to minimize that is looking to use standardized technologies which are available around the world, so that the uplift is not so significant to get connected. And there are other important pieces like time synchronization, and I know Steve will have more to say on that. But there's a whole range of different technologies that people need to look to bring into this region. And I think it's just starting, and we're just on the cusp of those opportunities opening up.
It certainly feels like we're just starting. So quite a few points there, Alistair. Let's start to break down some of these and bring Steve in. You mentioned time, speed, low latency. Steve, why is that important, and what technologies can be used to increase transparency and accuracy? How does it all fit together?
So time in particular, then. So providing robust time is absolutely necessary if you want to have any sort of transparency, to ensure fairness, to monitor your performance, and the provision of time gets very complex very quickly. The whole exercise of deploying a new time solution could easily take 12 months. Baselining it, ensuring you got robustness and the precision that you need. So it's not a project that you want to be repeating really frequently. The best advice I can give is pick a solution that will scale with your business over. You want to look at least a 5-year plus horizon before you embark on it. Now, what's quite nice is that the technologies the different time-based technologies can be deployed and then, as it were, incrementally tuned to give more precision. So if you kind of pick the appropriate band in which you project your business to operate in, you can pick a solution that you could deploy fairly easily, but then get more out of it over time, as it were. Some examples of that, right? Good old PTP, right? Software-based time synchronization. Typically it's millisecond level precision, but if you tune it, then you can get it down to microseconds. If you want to start moving into the nanosecond range, then you've got to look at technologies like NTP or PPS. I'm sorry, PTP or PPS. Both of those need a high precision time source, and so starting to look at how you get time into your data center becomes as important as distributing time and synchronizing time. And there, robustness is absolutely critical. Yes, you can get a nanosecond time source by sticking a GPS antenna on your roof, but then you've got to worry about the robustness of that and its susceptibility to tampering and so on. There are solutions to that. Hybrid protocols are used. Fall back to PTP or use PTP to govern what. Use NTP to govern what PTP is doing. Within that nanosecond range, you've got to think about internally distributing time. So you need a time distribution network. PPS is a simple way of doing that, and obviously PTP. And you also start to really need to think about tuning and monitoring your actual time service, and that starts bringing in the necessity to use hardware time stamping from your kit. So layer 1 switches with hardware time stamping. At the most extreme end, and this is not really for this region, I suspect, but sub-nanosecond time synchronization is possible. And obviously you do need that if you're trading on low nanosecond timescales with FPGAs and so on. There you've got to move to exotic protocols like White Rabbit, and to deploy those you need special networks. You need to use synchronous networks rather than asynchronous networks, which is your standard Ethernet.
Very good, thank you.
I think just to add a little bit of color to that around the time and exchanges. I think Steve mentioned earlier that it went from 1,000 messages a second or a day, sorry, or trades to hundreds of thousands, and the exchanges are sort of moving from 10 milliseconds down into and why time is important, and time is often not the first thing that an exchange might think about. But in order to understand the trading behavior, if you have a customer who sends all of their orders in and they all have the exact same timestamp, it's very difficult to determine things like market manipulation or uncouth behavior in there. So you need to understand, and the exchange has a responsibility to not just increase the speed of the exchange, but also to be able to track and understand what is going on and what is happening in that trading environment, especially as more sophisticated parties come to the region. There's going to be more importance on the types of time solutions that Steve mentioned, so that there's more transparency and visibility into those trades.
So it's basically understanding the flow of trades as they come into the sort of central platform, so that you can notice when people are abusing the system, but also order of trades as they come in, and so on and so forth.
Exactly, processing them in the right order and everything else. And actually, time itself has become, some exchanges even sell time as a service to their data center customers, so that their customers understand what the exchange's time is and how those timestamps work, so they can understand their high frequency strategies in this space. So timing is both a potential necessity and also a potential revenue in these areas as well.
Absolutely. So, and again, sort of following on from that, as you mentioned, co-location. What does a typical co-location setup look like? What hardware is used? How does it work?
Sure. So, right today, I think a lot of the Middle East hasn't really had those co-location opportunities. It's much like, I guess, Europe and the US back in the early 2000s, before the big co-location craze started moving forward. But what we did see was that, exchanges have almost changed a lot of their behavior. And it becomes a data business as those volumes and the data increases. Exchanges make a large portion of their revenue now off selling that data and distributing that data as the volumes get bigger. So you typically will have your market data feeds coming from the exchange and separate trading access to the exchange, and it's all about being with fairness there. So it's about having the same length of cables for each of these market makers to have, down to the nanoseconds in some of these regions. It's a very different concept to the retail connection, which is less sensitive to this type of trading. But we do see these layer 1 switches or low latency layer 2, 3 switches coming into this space, all operating at 10 gig with a lot of time stamping capabilities on it. And then in the servers, we see, the AMD SolarFlare cards, one of the standards in the industry for software-based solutions, really lowering your latency and lowering or increasing determinism, so that you get less jitter and you're able to respond to market behaviors in a much quicker space. So I think, for this region, as these co-locations come online, there's a lot of technology, and it's very hardware driven as well within the co-locations, much more so than when you're hosting in a cloud-based environment and connecting to the exchanges remotely. So it becomes much more important to understand the choice of hardware that you're using, making sure that it fits with your scalability. Do you need more cores, or do you need just a low core count and really fast cores? And that will all depend on your applications, and if you're a broker trying to provide that risk checking service and funds to your through your OMS and EMS, or if you're actually looking to connect directly and do market making capabilities.
Very good. Last question on this sort of speed theme. It mentioned determinism. Can we explain what that is and why it's important? Steve, maybe that's one for you.
Yeah, sure. So, if you're a participant, then low latency and good determination, increases the probability that you're going to fill any particular order, right? So it's absolutely important for your own profitability, and it ensures the algorithms that you're deploying are functioning as they were designed. It allows smaller bets, it reduces risk, reduces the spread, increases liquidity. So there's lots of competitive advantages for lowering latency and improving determinism for exchange, for everybody, quite frankly. To get there, I mean, one of the things that's very important, probably the most crucial thing if you're thinking about moving into that space, is to focus on the thread structure of your applications. And that's something that any developer should be doing now, because software lives, quotes, forever. And if you start with the wrong structure, it could take you a decade to back out of it. Thread structure, making sure that your threads are, don't lock against each other, that you're using shared memory, producer consumer rings, that you start to think about the core counts and the cache hierarchy and the kind of NUMA at a very high level, the structure of the processes in which those threads are going to be operating. And that's not rocket science. You can get this from just a simple picture of a CPU. Because if you get that right at the beginning, then you can enable, as appropriate, user space technologies. So you can take operating systems completely out of the equation. That allows networking packets to go directly from hardware to that thread and be processed, which makes a massive difference in terms of latency and determinism. And there are some out-of-the-box technologies like onload that sits on top of Solarflare cards that if an application is at a high level structured in the way I've described, will dramatically improve latency and determinism, as I say, pretty much out of the box. After that, then you can progressively improve through tuning and starting to move into custom APIs, and even hardware acceleration as appropriate, such as FPGAs. But if you get the basics right, then you have a nice trajectory that your business can grow through for years.
Very good, thank you. Let's have a look. I've seen a couple of questions coming in on Slido. One of them is talking about connectivity, and this is an item I wanted to get into. So connectivity came up in our poll as the number one sort of concern, if you like. Question on Slido talks about connectivity options for people wanting to trade electronically in the region from major European and American centers. But perhaps we can talk more generally, starting with Rami and Saif, about what those connectivity challenges actually are. And then maybe Alistair and Stephen can jump in with some solution type response. So, Saif, do you want to kick off? What are the connectivity issues?
Yeah, sure. So let's take a typical user in the US or in Europe that wants to invest in any of the MENA markets. Typically speaking, what we're seeing in the world is that any given individual would have a brokerage account, and they would prefer to do everything throughout this brokerage account. So the problem with that is that it requires there to be connectivity either directly through these brokers globally into the exchanges, or through these brokers into other brokers that are connected to the exchange. So if you think of a country like the US, they have an Alpaca or Dry of Wealth ecosystem where if I as a broker want to offer US stocks to my users in Egypt, I simply just connect to one of these brokers. They already have the licenses, they already have the infrastructure, they opened up the APIs to allow for such a thing. Now, we're very far off from that. This requires a lot of things. One, it requires that the brokers of the MENA region have already built their own infrastructure. Unfortunately, we're not in a situation where it's Europe or the US, and a lot of it has to be built bottom up. And this is actually the journey that Thunder has gone through and all of the other brokers are going through. And then it needs to reach a point where this is enough and sufficient for their own core set of users so that at a later point that they open it up. Or you need to have dedicated infrastructural plays in the region. And the problem is that you have a mix of two issues. Either the market is too small for this to be the very first focal region, and typically they would still prefer to start in Europe or in the US, or the caliber and know-how is just non-existent. So as of today, a big part of it relies on the user directly seeking these brokers in these regions and then opening up an account with them. The second big issue that they would hit is a concept that I think is relatively exclusive to the MENA region. I think if you're a user in the US and you connect to a broker and you want the broker to execute whatever trades on the exchange, it happens through an omnibus approach where the exchange doesn't even see what the end user is doing. It's mostly on the broker, at least the information required. In our MENA region, it's a fully disclosed model where if I want someone from my users to invest or to trade or to transact in one of the exchanges, the exchange also has to do their own due diligence and also needs to register the user on their platform. And this is one core setup issue that is trying to work out. And that's why a lot of entities are not able to export an existing solution abroad and just connect through a back office in the region, because there are these nuances that make it very unique. So it's something that we're actively working with the exchanges on. How can you register users fast enough? Because as we know today, in today's age, if a user doesn't do something within the first 5 minutes, you probably lose them for life.
Very good. Rami,
And then the third,
go ahead. Sorry, go
yeah,
ahead.
and then the last point to me was, okay, post onboarding and post funding their account, information is not very apparent. So if you're someone in the US or in Europe, you actually have a lot of information about these investments that you're about to make, whether it's like proper research provided by research companies, whether it's a lot of people talking about the underlying asset and making it very easy. I think this is not yet there in the region. There's a lot of plays that are happening that are trying to tackle this point. Sorry, Andrew, that I cut you off.
No, not at all, not at all. I think, again, I was just going to pass along to Rami. There's some work to be done here. Some of it is technical, but some of it's also sort of like policy strategy on the exchange side.
Very true. I think each exchange has to develop its own KPIs and understand what they need best for their markets, whether it's increasing the number of total investor base in the market or increasing the volumes or number of transactions. All of that will highlight what kind of deficiencies they have in their systems, and thus they will have to solve it accordingly. In totality, I would say that the Middle Eastern markets have invested heavily into changing and enhancing their tech, their trading systems. We have seen millions of dollars paid for the international vendors from different markets in the last 5 to 10 years, whether in Saudi or Qatar or ADX or Egypt in the coming year as well. Many exchanges, their licenses are to be changed in the coming 2-3 years as well, so they will be reinvesting into that. So highlighting all of these opportunities are definitely on their agenda when they come to discussing the scope of work with the vendors. I definitely second the idea of the importance of surveillance tech. It is an area that needs to be enhanced heavily, because I truly believe if you do not have proper surveillance systems, it's just a showstopper. Because if the market is blind and the regulator is blind, the easiest thing to do is to halt tradings and cancel orders and all of that, which is the thing that we don't like to see and we do not see in developed markets. And the last idea is definitely, as Saif said, is increasing the connectivity of the retail segment, because in our part of the world, unlike Europe, for example, we're not an aging communities. We are actually young communities. 70% of the population is less than 40 years old, and saying that this would require a lot of changes when it comes to proper trading and easier access to quality assets and settlement and clearing. As I said, remains the untouched part of the value chain for a strange reason for everyone, including myself, that it takes time to clear it and to actually show the money into your account. It takes a little bit of time in that, and if you're a foreigner, it would create some sort of concern for you if you had risk to invest into Middle Eastern markets. So all of that coming together definitely will draw more opportunities that we need to work on, and I see it growing for tech vendors to come into the market. I still see our market is starving when it comes to technology, whether on the brokerage side, on the market side, on the regulatory side. I think regulators specifically still miss being technologically enabled. and they always take the easiest route for to regulate without seeing and without being properly informed. So definitely enhancing the role and the power of the regulators as well is a key area.
Very good. Thank you. Alistair,
Yeah.
Steve, thoughts on how to address this connectivity issue and help?
Yeah, no, I think actually, I think Rami mentioned something earlier, which was a united way where people can connect to a single source and trade on multiple different exchanges. And I think you've got connectivity in the way that Steve and Rami have just mentioned, but you've also got I guess how the connectivity from a physical perspective and actually getting a 10 gig link or a 1 gig link to the exchange and to a co-location. In Europe, there's a huge amount of connectivity between, London, New York, Frankfurt, Chicago, and it's relatively cost effective because there's so much of it. I think when you look at the MENA region, the cost of connectivity is pretty high for the bandwidth that you can receive, with pretty high landing taxes in UAE, for example, and other locations. And the reality is when you're trading, you need to bring in data from other exchanges. If you're trading an oil company, you need to be bringing in data from the CME about oil prices. To bring all of that data in a low latency and deterministic way, it can cost quite a significant amount of money if you have to do a connection to every single one of those venues in the Middle East, if you're doing, co-located algorithmic trading. So I think the part of that is the cost that people are looking at, and particularly with the spread of the stocks. Not all of the stocks are on each exchange, and if you have to put in a 10 gig link to every single Middle Eastern exchange and a dedicated colo, and there's only enough liquidity at the moment for one stock on each, it begins to get very costly and very high to trade there. So I think this is where that consolidated engine, and I think the way the US markets did it for a long time. CME opened a POP in London, so people could gain access much more cost effectively, and CME did that access. And a consolidated effort from the Middle Eastern region to allow that access from other locations and maybe major financial centers could definitely help in this space and lower that barrier to entry.
Very good, thank you. Let's go to that other Slido question that came in that I liked, and I'll throw this to the panel. Do you see any increase in on-site technical support of international capital markets firms who have only recently begun working in the region in the last 1 to 2 years? And what are the immediate needs that you anticipate for technical support? So the question is, if I'm a newcomer to the business in the region from outside, is there expertise, resource that I can use to support my operations there? Have we any thoughts on that, gentlemen?
Yeah, maybe if I add something there, like I think what you should expect is that a lot of the technical know-how and expertise will actually come from abroad. The expectation is that you would be bringing it with you. However, what you would find is that there's a very big openness, and I think this is something unique to the region. If you need to talk to the regulator, you'll be able to talk to the regulator. If you need to talk to the heads of the exchanges, you'll be able to talk to the heads of the exchanges. If you need to talk to the brokers, and so on and so forth. Like I think everyone is just extremely vested into making sure that this works, and everyone is extremely approachable to anyone that's bringing any sort of innovation. The context that you would need is something that you can easily fill, because these conversations will happen and you're gonna directly have the conversations with the subject matter expert of whatever topic that you want to talk about. But if there is an expectation that the expertise of what needs to happen is there, this is where I think needs to come from abroad, not from internal.
Very good. Actually, I might chime in with a bit of a house ad there. We are actually co-hosting with Rami's group, the AFCM, our MENA Trading Tech Summit here you go. Look, there's actually proof that we'll be there. November 25th, the Ritz-Carlton in Bahrain, in Manama. So this could be a great opportunity if you're interested to come and network and really come and talk to some of the prime region about how they can help. Certainly worth having a look at, and you can register through our website. So if you fancy coming along, we'll see you there. Okay, thanks for that. We are running out of time, last few minutes. So I think what I would like to do is to really just throw this a sort of a future-looking question to the group. Maybe Alistair, starting with you. What's next for the MENA region? With a sort of an ecosystem coming into place, what role is there for MENA? As it expands out into wider Africa, for example, can act as a conduit between the European and APAC markets. How does the panel see this playing out? Alistair, do you want to take a shot?
Sure. I mean, as I said, I think there's a lot of technological innovation going on in the Middle Eastern region at the moment. And I think, as Rami said and Steve at the beginning, that they're sitting in between large economies, and they've got assets and funds invested all around the world. So I think there's a great opportunity for them to continue to grow and gain more investment from abroad and provide those solutions and facilities. So between European, US, and the Asian countries, as was said before.
Very good. Save.
Yeah, no, the way I would look at it is first like inwards looking and then outwards looking. I think inwards, like there's three big things that I expect to happen over the coming years. I think one, there's going to be a much wider representation of investments available to whether foreigners or locals, not in the sense that we're going to see a lot of like new listings and that these listings are going to double or triple the amount of available supply, but it's more of it being a more representative sample of today's society and today's age. A very long time ago, it was maybe governed by like agriculture companies, tourism companies, and oil companies. Now, with this change of global dynamics and economies, it's more into tech and innovation. I perceive that we're going to see a lot of those coming from out of this region into the markets. Second thing is, I think we're going to see a lot more representation from society. I think, to Rami's point, a very big part of it was kind of monopolized to institutions and high net worth individuals. And I think now we're starting to see a lot of the existing members of society get into the market as well, which will change the dynamics in the end of the day. It changes movements within the markets. It changes what's relevant to today's age and society. Then I think lastly is we're going to see hubs forming. I think Egypt is going to remain as a big hub on its own. I think Saudi is going to be a big hub on its own. I think what will also happen is that UAE is going to probably gather all the remaining members of the MENA region as one big hub. I think individually they're all relatively smaller than Egypt and Saudi, but so collectively they're actually a very big force. And because of the innovation drive that the UAE is doing and the interconnectivity between these exchanges, I think this is naturally going to happen. Then if I look a little bit outwards looking, I think MENA is a very good starting experiment for the wider region in general, whether this wider region is the rest of Asia or the rest of Africa. I think it blends like two of the best of both worlds in a sense, where you have a better infrastructure, but you have also this growth story of an underdeveloped region becoming a developed region. But I think a lot of what worked in the US and Europe might not necessarily work in the rest of the regions. But I think the MENA region represents a very good testing ground to see what works, what doesn't work, and as maybe level one before you enter into the level two of the lesser developed nations.
Very good. Thank you very much. Rami, last thoughts on that in the final few seconds.
Super. Remember, Andrew, when we started the idea of bringing trading tech to the MENA region, I told you that the region is still very hungry when it comes to tech. We're lagging behind in several things in operations, on day-to-day operations. And I think that the tech budgets that's being approved by the exchanges is very generous, and we're going to see very good improvements in the region in the coming few years, allowing more startups and tech-enabled companies like Thunder and alike to empower their communities and empower their investors to come and trade and do all of that. All what I'm seeing that are positive things happening into the MENA region. We're seeing resilience, even with the craziness of the geopolitical situation in the region. We're still seeing resilience, especially in the GCC markets and in Egypt. We see that the markets are growing, liquidity is enhancing. We're seeing more local investors are coming in, which gives more comfort for international investors to jump in as well.
Very good. Thank you very much. Well, look, we're out of time. So it just leaves me to say thank you to our panelists. Thanks for joining this great webinar. I really learned a lot today myself. Thanks to our sponsors, AFCM and AMD Solar Flare. Thanks to each of you, Rami, Saif, Alistair, Stephen, for your insights today. I look forward to seeing everybody at our event on the 25th in Bahrain, if you can make it. And with that, I'll say goodbye. Bye-bye, everyone, and thank you.
Bye. Thank you, everyone.
Bye.